Very good morning and wishing you a super duper Monday. Have a great week ahead as well. Welcome to today's episode. We're talking about three things. Mixed jobs data boosts stocks. G7 agrees on 15% minimum tax and the week ahead. US stocks rose Friday, posting modest weekly gains after the monthly employment report showed the labor market continued its slow recovery in May. Stocks started off the week wavering between small gains and losses before momentum picked up on the week's final trading day. One factor that helped break the lull, the May jobs report. Payroll grew by about 559,000 last month, the Labour Department reported Friday, up from a revised 278 in April, which marked a sharp drop from March's figure. The unemployment rate fell to about 5.8% in May from 6.1% the prior month. While the gains marked an uptick from April, they were lower than what economists had predicted and reflected businesses struggling to fill job openings as potential workers remain on the sidelines. The labor recovery has slowed from earlier in the year. In March, remember, the economy added about 785,000 jobs. A development economists say would delay a full labor recovery to well into next year. Still, about 9.3 million people were unemployed and potentially available to work in May, while employment was still down by about 7.6 million jobs compared to the pre-pandemic levels. At the pace of last month's job gains, it would take more than a year for US employment to return to Feb 2020 levels. The mixed data offered investors one main takeaway: the labor market is improving, but not at a pace that will make the Federal Reserve rush to pare back additional support from the economy. The Dow was up 0.5%, finishing just below its all-time closing high hit last month. The S&P 500 was up about 0.9%, also missing a record. The Nasdaq was up about 1.5%. For the week, the Dow was up by 0.7%, the S&P was up by 0.6%, and the Nasdaq was up about 0.5%. In the bond market, the yield on the 10-year Treasury note pulled back. It fell to about 1.55, its lowest level since late April. On to the tax agreement that we heard over the weekend. The group of 7 leading rich countries agreed to back new rules for taxing businesses that operate internationally in a significant step towards a global agreement that would deliver the 15% floor that the Biden administration said it could accept. The agreement reached by Treasury chiefs during a meeting in London on Saturday resolved some of the long-running tensions between US and large European economies that have at times threatened to push the international tax system into chaos and spark a transatlantic trade conflict. Under the deal, G7 members will back a global minimum tax rate on company profits and a new way of sharing the revenues from taxing the world's largest and most profitable companies. The G7, which comprises Canada, France, Germany, Italy, Japan, the UK and the US, agreed that businesses should pay a minimum tax of at least 15% in each of the countries in which they operate. The G7 ministers have made a significant, unprecedented commitment today that provides tremendous momentum towards achieving a robust global minimum tax at a rate of at least 15%, is what the Treasury Secretary Janet Yellen remarked. There are still significant details to be worked out though, and the deal isn't sufficient to see the new rules applied globally. Now, for that to happen, it would need support from the G20 leading economies, which includes China and India, among other developing economies, as well as the backing of the 135 countries that have been negotiating the new rules as part of what is known as the inclusive framework. Treasury chiefs from the G20 are due to meet in Venice on July 9th and 10th. On to the week ahead, US inflation data on Thursday will be carefully scrutinized by investors seeking clues on when the Fed may taper. May consumer prices probably rose 0.4% from April and 4.7% from a year ago. This is according to consensus. Core CPI is seen at 0.4 and 3.4% respectively. Bloomberg Economics predicts month-on-month figures that are faster than consensus. China's factory gate prices look set to get even hotter, potentially adding fuel to global inflation concerns. The May PPI number due Wednesday probably rose about 8.5% year on year is what the economists are predicting, the most since 2008. However, the CPI is seen climbing at 1.6%, a sign price pressures aren't feeding through to consumers. Rate decisions will be in focus later in the week, most prominently the ECB on Thursday. While no change in rates is expected, the central bank is gearing up for a major decision on asset purchases. Bloomberg Economics expects policymakers to keep monthly PEPP buying at about 85 billion euros in the third quarter. Lastly, I'll be looking out for Apple to unveil the latest tech. The company's online worldwide developer conference is scheduled to run Monday through Friday, and improvements to Safari, iMessage, Maps, and Health are expected. That is the update. Stay safe and healthy, and I'll speak to you tomorrow.